can see my screen.
Yes, we can.
Okay, thank you very much. Thank you very much. Thank you. So it's a great an amazing opportunity to have everyone here again. I believe that more and more participants will be joining in soon. Once again, my name is Adekoya Anuluapo. With me here this morning, I have Emmanuel Nosomi from CPS LLP. I have Mr. Ibrahim Abubakar, Tax Audits FIRS. I have Dr. Paulino Siyika, Transfer Pricing, that's International Tax, FIRS. I also believe that Mr. Folusho Mustafa is also here, Tax Audit LIRS. Thank you so much. So these are our panelists, and thank you once again to everyone joining us this morning. Okay, so this is our webinar series 3. I believe that some of us here right now were participants of series of our first webinar, and also at series 2, and we are here again for series 3. Thank you for trusting us to deliver excellent content and very, very insightful content that are useful for your day-to-day practice and either tax, business advisory, or account assurance services. Thank you so much for always sticking with us. So before we delve into today's program, we would just like you to look at your screen in case you're not looking at your screen presently, and you can see the QR codes on the screen. These QR codes are meant to enable us communicate with you, and you communicate with us also. So you can scan this QR code so that you can get our contact details. You can also connect with us on our social media platforms. You could also join our dedicated WhatsApp channels for MSMEs as well. You could be in our channel to receive regular insights. So please just take 30 seconds to scan this QR code so that we can always reach you, and you can always reach out to us even after this webinar session. So I believe we are picking up our devices, our phones, to scan the QR codes on the screen before I take it off my screen. Would also still bring it back during the session, but you can please scan the QR codes now. Okay, thank you so much for doing that. So I believe that in the chat section, you would see a link that would be dropped there. So as more participants are joining, would be dropping the link. But because you're here now, we'd like you to just click on that link. The link will be in the chat section so that you can do 2 things. First of all, start dropping your questions in case you have questions, on your mind and you're not been able to do that maybe while you were registering. So please start dropping the questions. Okay, once again, thank you. Welcome everyone, and thank you for joining this webinar on managing successful tax and transfer pricing audit exercises. So just to set the tone for what our panelists, our experts, our panelists will be talking about today and the questions they'll be dismantling, I would just like to go through the subject matter of tax and tax audit exercises generally. So what do we mean by tax audit exercise? What is that thing that we want you to have at the back of your mind? What is that idea that we want to dismantle during the panel session actually? So the things we'll be speaking to. So like I said, I would be setting the tone for today. So yes, managing successful tax and transfer pricing audit exercise. So before I delve into that, I just want to, clear the hair in the room and then bring down the allegedly strong man in the room to say that, we all have that belief that tax audit, transfer pricing audit is a way of witch hunting either an individual or a corporate body, but that's not true. It's actually a statutory exercise. The law has provided, if you go through the FIRS Establishment Act and several, provisions of the law, you would see that the tax audit itself is a statutory practice. So that is why you would see the taxman aiming and always, putting their foot forward to say, okay, it's time for audit. And what's the purpose of this audit in itself? That's what we want to just look at briefly. So tax audit exercises, they are not about finding fault, like I said. It's not to witch hunt us. It's not to go after, any particular individual. It's not because there's a background information. Those are not, the reasons why we have tax audit exercises. But the reasons why we have them, and you would always see it come up, it might be once, it might be twice. The number is not, it's not something we can put numbers to. But the reason why we have them is to enable continuous improvement of financial information and the integrity of the financial information that's been provided, as well as the accuracy, of that information. And to crown it up is to ensure tax compliance. So the purpose of this audit is really to ensure tax compliance, amongst other things that, I just mentioned. So what are you supposed to do when the essence of tax audit is to ensure compliance? So what happens actually? So it's like it's a process. So the first thing that happens is, as a taxpayer, you self-assess. So what do I mean by, self-assessment? What does self-assessment mean? Somebody would, I'm sure one of our participants will say, okay, have I been self-assessing myself? I just know that I pay tax and then the tax man comes after me, or I don't pay tax early and the tax man comes after me as a taxpayer. So it's not perfect, actually. So the process of self-assessment as a taxpayer is when you as a taxpayer, be it a corporate body or an individual, you correctly compute your own tax by yourself, for the purpose of paying that tax. So you compute your tax your tax liability by yourself, and then you ensure that you complete your tax return. So you've completed your tax liability, be it company income tax, that's a CIT, or your payee. So after completing it, you ensure that you complete the tax returns and you file those tax returns. So that means that first off, you compute first. Then second process is complete your tax returns. That's the second thing they are going to do. And the third process after that in the self-assessment, exercise is you ensure that you make payments of that, assessment that you have made by yourself. And you submit every other, information or document, for example, your audited financial statements that you submit with, while you're trying to file your company income tax. So you submit every necessary accompanying documents that you're meant to submit to the tax man. So this is why tax audits will come up, because you have self-assessed, you have done everything that is required. So you can see on your screen here that you self-assess, you file your return, and you pay the tax liability due. So once you've done this, that means that you have certain information with the tax man, with the tax authority, or even if you've not done that, because of the process and the statutory process put in place, there would naturally be information with the taxman. So when you've done this, the taxman now wants to ensure that the information you've given is actually accurate. The assessment you've computed is actually accurate, and you have made the due payments. Sometimes maybe you computed 500,000 and then maybe you paid 400,000. The taxman wants to ensure that you comply totally with what you have assessed and you pay the right amount, for that particular tax for that particular period. So what they're concerned with is the tax liability, that you've assessed yourself, you have complied in that relevant taxing that you have done the needful. So that is why you would naturally see audit come up, tax audit exercise come up. So I believe we are still following me, and we are enjoying what's we breaking down what tax audit actually means and what it corners to us. So we have spoken about self-assessment. We just spoke about self-assessment. So what are the pros of self-assessment? What are the positive impacts that we have from self-assessing ourselves and paying our tax liability? So we have 5 points here that we can see on our screen. So the first is to enhance efficiency. So we spoke about enhanced efficiency as well, to facilitate quick tax collection, as well as to reduce compliance costs, reduce administrative burden on tax authorities, and promote efficient resource management. So to look at all, these points that we have stated, holistically, I believe that you would agree with me that if you self-assess, as maybe an individual or a corporate body, when you self-assess yourself, you either spend nothing or you spend little compared to, if the law had told you that, before you can, pay your liability, you need a consultant to come check your books for you, for you, do your assessment, then, make every other payment for you. That is costlier. So first of all, we want to ensure that we are not, you are not put through any, unnecessary stress. So that's why the law is saying, oh, if you feel like ours is just, submit these documents that are required and make sure that what you're submitting to us is actually accurate, is complete, and you are compliant. So you will be able to, spend less to reduce compliance costs actually, compared to during the audit process, wherein you need, to go through different stages to also, reach out to a consultant, other things that, are associated with it. Also, I know that we would agree with me that the amount of time and resources it would take if we were not having self-assessment, in place, if we had other kind of process in place for tax collection, would be more tedious, might not be even as efficient as we want it to be. And also we would, have to expend more resource on, for us to manage that process. So these are the, some of the key reasons why, self-assessment is in place, and the benefits of self-assessment, both to the taxman and to the taxpayer. So why do we audit? Why do we have audit exercises? I believe that, that will be the question at the back of our minds to say, okay, we have self-assessment. So why don't we just keep on, accessing ourselves and paying our tax? Of course, we would pay. So that's a question that somebody might be asking, that must we have audit exercises? We understand that we had said earlier that, okay, audit exercises are not to which ones, just to ensure compliance, accuracy of information, and, every other thing that we have in the basket there. But still, why do we have it? So the why is not far-fetched, actually. So first off, the taxpayer has to be educated. Sometimes it might be before or after the audit process that the taxpayer is aware that, oh, this is how I'm supposed to treat, stamp duty in my books. This is how I'm supposed to, relate with expatriate affairs in my books. This is how I'm supposed to properly classify this item or this transaction in my books. So the process of audit would educate the taxpayer, on what is required to be done. Actually, it's not just, for you to be audited and then the books are closed and then the taxman and the taxpayer moves on. That is not the only reason. So like I said, one of the first things we have is to educate the taxpayer. As well, we also have, as one of the reasons why we have tax audits, recovery of taxes. So like I was explaining earlier, that sometimes the tax liability due might be maybe a 500,000 there, but based on the self-assessment and what the corporate body or maybe the individual thinks that, oh, this should have been the right computation and calculation, the person might have paid maybe 400,000 naira. The taxman would come and then give you reasons to say that, oh, this is the amount you're supposed to pay. We have accessed you, we have checked your books, and we can ascertain that this is the amount due, as tax, and then the taxman recovers the, outstanding taxes that have not been paid. So that is another reason why we have, audit exercises. Also for continuous compliance improvement, like I said earlier, that the taxpayer is educated on the proper position of both the law and, computation assessment that has been made and what should be done actually. So even after the audit process, you would agree with me that it's not just that the audit has been closed and every party moves on. Now the taxpayer knows what to do, knows the things to put in place, knows the right planning and management, to do, knows how to effect these processes in their books to ensure that they continue complying. So they don't just comply once, they continue complying. So when the audit is for a particular year, the next year it is expected that, oh, during the audit process, they can see, those things that have been, treated or spoken to during the previous audit. So another reason why we have, audit exercise is for feedback, for tax system improvement, and also to encourage accurate compliance. So I believe that with for every participant in the room this morning, we would see more reasons to ensure that, oh, okay, so believe and also ensure that our books are accurate, and also believe in the system of why we have tax audits. So yes, let's talk about audit and investigation. So we've been saying this is what tax audits, tends to achieve or aims to achieve. This is why we have it. These are the pros. This is why the tax audit exercise has to go on. So what exactly is even the tax audit? And you've also heard about tax investigation. What's the difference between tax audit and tax investigation? I'm sure that, if this comes up again during the panel session, I'm sure our panelists would dismantle this. Like I said, I'm here to set the tone for the conversation that we'll be having during our panel session. But while I do that, I would just, give us this heads up and just break it down to us. So say that tax audit is a routine review, a routine review. That's the key of tax audit, a routine review of the company's financial records to ensure compliance. Like, we've been stating this since we started this since I started this presentation that, to ensure compliance. So again, tax audit is a routine review of the company's financial records to ensure compliance with tax laws and identify any discrepancies, for full compliance. The essence is to ensure full compliance, not partial compliance, not inconsistent compliance, but a full compliance. So what then is tax investigation? So unlike tax audits, that is a routine review. So you would have your books audited, in 2023, 2024, like that 2025, you would have your books audited. It's not just normal or just something that just happens every time that you get your affairs investigated. Why? Because tax investigation is a deeper and more thorough examination, and it's typically triggered when there's a suspicion of fraud, tax evasion, or maybe a significant or unusual non-compliance. That is when you naturally see tax investigation come up. So it's not something that it's a routine thing or you generally see every time, or every year happen. Okay, so that is that about tax audit and, investigation. So what does the tax process, what does it seem like? So we have, you can see on our screen, we have simplified the tax process from start to finish, how it would naturally, how the flow would naturally go. So what's the first thing that would happen? So the first thing we would see in the tax audit process is risk assessment, notification, and planning. So this is where the tax authority, be it LIRS, be it FIRS, this is when they first of do their office. That is what happens in the office. They assess your records that they actually have, the records of you they actually have. Then they reach out to you to notify you that, A and BC Limited, we want to, come to your, we would like to schedule a meeting or would like to come to your office to do one or two things. That one or two things might actually include document review. But before we go there, so you would be notified that, this is what we are doing currently with your records, or we have your records with us and would like you to send to us some documents. Also, the planning process is to say, we would like you to know that we'll be coming to your office maybe on the 12th of December or 25th of December. And this is for the process, to initiate the process of audit with your firm. So the taxman would not just come to your firm. They don't just wake up in the morning and say, we are going to A, B, and C Limited. No, they would have done their risk assessment, back end in the office. They would have notified you, or maybe they just come to your office to notify. That is what is usually obtainable. You would be notified and given, enough time, reasonably, when I say reasonably good time, so it doesn't mean that you would expect that 2 months, a year is given to you to plan. That's not naturally obtainable. It's not possible. So you'll be given reasonable time, most, in accordance to the provision of the law, to prepare yourself for their arrival. So that's the second process, their arrival. So know that I said the first time while they notified you, they would have requested for documents and asked you to send those documents, to the tax office, either via mail, either, come and submit some physical documents. They would have done that in the process of, notifying you. So the second thing that happens majorly is document requests, review, and fieldwork. Like I said, most times documents would have been requested. So when they come for fieldwork as well, so more documents might be requested, or maybe the documents requested, you had not, fulfilled that requirement, or you had not submitted all the documents. So on the field, in the field, documents will still be requested. The documents will be reviewed to be sure that those are the things they're required for, and the fieldwork would commence. So naturally, in some circumstances, you might see that they might want to, if you have very large transaction records, they might want to say, oh, we'll have to do this for 2, 3 days and stay in the office, or they say, okay, thank you for giving us this document, and then they go to their office. So what is going to be done after, the document request review and fieldwork is analysis of findings. So they are back in their office and they are going through your records, that which you've given them, that which they have. And, somebody might be saying, why am I giving them my records? Because you have self-assessed. They were not part of your financial process for that financial year. You have self-assessed yourself. They need you to provide evidence or source documents to, prove that which you have given or that which you have assessed. So basically, there'll be analysis of findings. So a thorough analysis of what, of the findings. Then the next thing is the audit report and assessment notices. So analysis has been done, and then the taxman will get back to you to say, oh, A, B, and C Limited, we can see that from your books, you were meant to have paid the payee of 5 million naira, you paid 4 million naira. This is our assessment notice to let you know that you have 1 million naira outstanding. You need to go and pay, within this period, and we can set the records right. And, so that is where you have the audit report. Or, okay, we have audited your books, and this is our report, which says that, okay, you were supposed to have paid maybe business premises, development levy for 2 years, but you had not paid, or you paid for half your staff, or you have, an expatriate. Different, things can come up both in the audit report and the assessment notice. So when you have been notified or the audit report had been shared with you, you would then, as the taxpayer, you then have to respond to this assessment notice and this audit report. This is where rebuttals and reconciliation meetings come in. So rebuttals are, they would say, oh, no, I don't think, the record you have is set right. Maybe we should send you more records to show that we were supposed to have paid 4 million and we paid 4 million. So if you can show, in your records, and you can prove that you were supposed to pay 4 million naira and that was the amount you paid, of course, that would be, the end to it. But the process of trying to, show that, oh, this is the amount you're supposed to pay, or this is not the amount you're supposed to pay, is where in your reporters come in, and where the documents to prove, what you're saying would naturally come in. So I will leave this maybe to the panel session, because I know that questions will naturally come here during the reporters and reconciliation meetings. Some questions will come up. So I will leave it to our experts, our panelists, to handle that during the panel session. So after this is where we have our audit closure. So the essence is that, okay, if, both the taxman and the taxpayer have set, maybe a month, 3 weeks to, close this audit, the best everybody wants to do, the two parties, is to ensure that we have enough records, or the outstanding amount has been paid, and the audit would be closed. So once the requirements are done, the audit will naturally just, close, and you would have details to show that, oh, we are going to do this audit exercise this period, and it has been closed. So just to wrap it up, I want to talk about some strategies, just two major strategies, to tax management. So we have tax management strategy, we have the proactive strategy, and the reactive strategy. So we would always advise, our clients, even at CPS LLP, we would always tell our clients that it is never the best to try to hold on or try to, use the reactive strategy, because it most likely would not benefit you. It will not even benefit you. Would always advise you to, go with the proactive strategy. So what is the reactive strategy? The reactive strategy is, where you want to respond to tax issues and obligations as they arise, rather than you having your tax planning in advance, or tax management. You want to start attending to things during the end of the year, November, December. You had January all through to ensure that everything you're doing, is properly done, your books are properly kept. And this approach, just focuses on addressing the liabilities. I said assessments, you would have maybe outstanding liabilities. So this approach just focuses on addressing the tax liabilities after they become due. Or maybe, and also it's not just addressing the tax liabilities, it might also lead to exposure, exposure to penalties and other, late filing penalties and other sanctions that might be attached to it. But what does the proactive, strategy do? The benefit of, going with the proactive strategy is that this proactive strategy enables you to, plan, manage, take every, required and statutorily provided, action for you to have, to make deliberate actions and maximize tax liabilities before they arise. So you do everything that's required to be done before, the audit process, and even before the liabilities, just arise. So this proactive strategy focuses on anticipating future tax obligations and leveraging on available tax benefits to optimize financial outcomes. I mean, it's to the extent that some people do not even know that there are tax incentives they could enjoy. If you pay your taxes even earlier, and you do all that is required to be done earlier. So this is this is it about tax management strategy. So just to wrap it up, I would like to share some tips with us, to manage successful tax audit exercise. So what are the tips, to manage the successful tax audit exercise? Like I said earlier, first off, adopt a proactive strategy and not a reactive strategy. That's very important. Also engage experts proactively, do your health checks, your risk assessment, and every other thing that you want to do, your tax planning, your tax management, reaching out to a consultant proactively, not when you thought that you could attend to the issue yourself, but then you saw that, oh, I think this is beyond the English I can understand. And, as a lawyer, there's something we would always say that the layman would read English like English, but would read English, between, beyond, and above the lines. That is how we read. So, as a taxpayer, you would naturally think, oh, this assessment notice I got is just English. I can respond, with English, but no, that's why we would need you to, engage an expert, a consultant, to do the needful. Also be aware of your maximum potential additional liability. How would you be aware of this? I mean, if you are done the needful, you've done the right computation, everything that is required to be done has been done, you would know what your potential additional liability would be. So you should be aware of this. Also, you should determine your audit strategy. So if you've done, 3 above, you should be able to determine your audit strategy. As well, you should build and keep audit defense files. So for your company income tax, your payee, your VAT, your withholding tax, transfer pricing, make sure that you always keep your audit defense file so that it doesn't just happen there. You start looking around, you do not have, source documents, you don't have documents to, speak to what your claim is. That would not be good enough. As well, set a turnaround time, for your audit and stick to it. If I'm very sure that our guys here, the panelists, they would never agree to maybe a 4-month period for audit, a 1-year period for audit, which is never even possible. So set a turnaround time, 3 weeks, 1 month, to ensure that, when you have the right consultant as well too, it would always help because, they know what they're doing, and it will help you to make, the right decision and stick with your turnaround time, for the audit process. Finally, I'd just like to add to say that, you have to maintain efficient communication with the tax auditors and communicate your timeline. Sometimes really it's maybe for some unforeseen circumstances, you are not able to deliver or you're not able to provide documents as they've requested. You don't just sit in your office and say, oh, when I'm ready, I would react to it. No, because the audit process is a time-bound process. Like I said, it's statutory, and they're also statutorily, giving time frames for this process most times. So you don't just sit in your office, you communicate with the auditors and whatever is going on. The very beautiful thing is the auditors, the taxman, they are human beings, and the law is not, just it's not the man that is made for the law. The law is made for man actually to guide man. So it's not like a rope is tied to our necks to ensure that yes, you must do this. Once you communicate the right procedures and every other thing that is required to be done would be put in place. So I believe that we've been able to set the tone for this session this morning, and you have a better understanding of what is expected and what happens during the audit process. So with this, you would see, I think you could check the chat box now, and you would see a link has been dropped in the chat box. So I would stop sharing my screen now so that you could, see the questions that you would be attending to. So while you click on the link that will be on the chat box, so I also want to confirm that I'm seeing that link in the chat box. Okay, yeah. So for people that are just joining, we will just put the link again in the chat box so you can see the link. So once you click on the link, it's a very simple process. We just want to do a bit of, a check, a bit of analysis that have you ever managed it, a tax audit exercise before? We have just 3 questions we would like you to, click on this link to answer this question. So we'll just give like 30, 45 seconds, to answer this question. So please look at the chat box. You have a link there. Please click on the link and you will see the questions to answer. Thank you. I can see that people are already attending to the questions. So we just want to know if you've managed a tax audit exercise before. We have 3 questions. We have, 20 more seconds to react to the first question before we move to the next question. Okay, so I believe we can move to the next question now. Okay, so we can see your voting. So the next question is, how was your experience with your last audit, exercise? Was it good? Was it awful? Was it not bad? You don't know, but you can't really talk about your experience. Like, it wasn't bad, it wasn't good, it was awful, or it was very good. I like, the way the audit process went. We were prepared, or okay, we learned more, we're educated as taxpayers, and they helped us to be compliant. Different reasons why you would say your tax audit experience was good, it was awful, or it was bad. So let's just have 30 seconds to also answer this question. Thank you. I can see, us indicating and dropping our responses. Okay. So 50% say it was not bad. 45 said it was good. 5% said it was awful. Don't worry. I'm sure that's one of the things we are here for. Okay. So somebody said if the first answer was no response for the second. Yes, no response for the second. I get that. Yes, thank you. Okay, so let's move to the third question. So we said we just have 3 questions. So during the tax audit exercise that you witnessed or you were part of or you managed, what did you think you could have done better? Was it you could have planned better? You could have kept your records better? You could, you should have gotten a professional support, or none of the above, because maybe you never had, audit exercise experience. So, we talked about these things that, keep your records, ensure you plan appropriately, get professional support. Okay, so what you could have done better, I can see that majority of us, believe that we could have kept more records. So that means that we have enough of people in this room that, they had documents or source documents requested from them and they could not, provide because records were not kept appropriately. Okay, thank you so much. So this will be the end of this question, this session. Before we move totally, please know that that same link, you could also click on it. You would see, for people that are using their mobile device, you would see where question and answer is. So when there was a side where you had the poll, also side by side, you had question and answer. So once you click on question and answer, you would see where you can put your question. We would love you to also indicate your name so we can, put a name to the person that is asking that question during the question and answer session. So the question and answer would happen at the end of, the panel session before we conclude the panel session. We'd love you to please, from this moment, start dropping your questions during the panel session. Drop your questions so we can react to them at the end of the panel session. So please, if you need assistance or you would want us to explain further, you could drop your message in the chat box to say that, oh, I can't see the question and answer segment, or I'll need assistance with the question and answer segment. Thank you so much. So this is where we would start, talking about our distinguished panelists. But before I do that, I just want to bring the the QR codes back to our screen again. So for people that joined us after, they can have a way to reach out to us. So very soon, in a second, I think you can see our QR codes, on your screen. So like I said earlier, before some of us joined, please scan this QR codes to connect with us on our social media platforms, to receive our newsletters and get regular insights, to the very detailed information we'll be providing you. As well, please scan the QR code so that you can join a dedicated, WhatsApp channel that we have for MSMEs. Thank you so much. We love that you're here, and the panel session would be up in just 1 minute. So before the panel session officially starts, we want to introduce our panelists to us. I mean, we subtly introduced them, by mentioning their names. at the beginning of this webinar. So first, we have Emmanuel Onasami. So who is Emmanuel Onasami? I said earlier that we have Mr. Emmanuel Onasami from CPS LLP. That's Cardinal Professional Services LLP. So he is the lead partner at Cardinal Professional Services LLP, and it brings over a decade of experience in corporate finance, tax, regulatory, and transfer pricing services to clients globally. He holds certifications from ICANN, ACCA, CIMA, and NABOSH UK, and is a sought-after expert on business and economic issues. I mean, for some of us would have seen him on, TV platforms, TVC, and some other, reputable TV platforms, dismantling some economic and business issues. At least I know that some of us have seen him do that. So, okay, that is that about Mr. Emmanuel. Thank you so much. Also, would also be speaking to our second panelist, Mr. Folusho Mustafa. Mr. Folusho Mustafa is the Director of Tax Audits at the Lagos State Internal Revenue Service, LIRS, as you popularly know it, and is a renowned tax professional with extensive experience in tax audit and compliance management, driving transparency, accountability, and revenue generation for Lagos State. Under its strategic leadership, LRS has enhanced its audit functions, improved tax collection efficiency, and fostered a culture of voluntary compliance, making him a key figure in Nigeria's tax reform effort. So I believe that very soon we would see Mr. Folusho Mustafa's video up very, very soon. Okay, to our third panelist, we have I think my screen is okay. So we also have Mr. Ibrahim Abubakar, Tax Audit FIRS. So who is Mr. Ibrahim Abubakar? Mr. Ibrahim is an audit specialist at the Federal Inland Revenue Service, FIRS, and is a seasoned tax auditor with expertise in corporate tax compliance, ensuring strict adherence to Nigeria's tax law through meticulous audits. His contributions have significantly enhanced the FIRS audit process, promoted transparency, and fostered compliance as well, playing a vital role in Nigeria's tax administration and enforcement strategy. Okay, to our last panelist, we have Dr. Paulinus Iyika. So Dr. Paulinus is in the International Tax Department. Dr. Paulinus heads the Transfer Pricing Compliance Division at FIRS, that's the International Tax Department, bringing over 13 years of tax administration experience and expertise in international finance, transfer pricing, and risk-based compliance. He holds a PhD from Covenant University and is a certified member of various professional bodies, that's ICANN, CIT, and other professional bodies. And he also regularly shares his knowledge as a sought-after speaker on public finance, tax policy, and international tax issues. Thank you so much, for gracing our webinar today. To all our panelists, we are grateful. I also know that the participants are grateful, and we are all eager to, hear what you want to share with us. Thank you so much. So I think right about now, we would like to have all our panelists turn on their videos and see them on our screen. So our participants, please remember that you can ask your questions with the link that is in the chat section. That is for the question and answer session. Thank you. So I can see Dr. Paulinus, I can see Mr. Ibrahim Abubakar. I'm yet to see Mr. Folusho. Okay, I can see Mr. Folusho Mustafa. Thank you. And Mr. Emmanuel as well. Thank you so much for being here again. Once again, we are grateful. So before we start delving into the questions we already have, we had some questions while participants were registering and some other questions that were thrown in the basket. So we'd just like us to, in 1 minute, the panelists to set the tone for what we would be expecting and the things they would really want to speak to today. So we would start with Mr. Emmanuel, just a minute. Thank you so much.
Thank you very much. Let me first appreciate my bosses on the call for availing us their time. Thank you very much, Folusho. Dr. Paulinus, thank you very much, Mr. Abubakar. thank you for making our time to be part of this conversation. I think my opening comment in 30 seconds, will be that we hope to put things into context with this conversation, particularly when we look at the Nigerian tax audit and investigation environment. As much as possible, I would love to say that, what Anu mentioned in closing, pursuing a proactive strategy against a reactive strategy. I would love to mention that whatever outcome, you want to achieve as a taxpayer in your audit exercise, I think you can still achieve it, with a proactive strategy, and I believe strongly that proactive strategy is what makes you plan effectively and make sure that, your audits are closed within the timeline. So as we continue the conversation, I believe you begin to get the necessary comfort to see to it that, of the truth, pursuing a proactive strategy is one of the way to go when it comes to audit management. So let me stop there and let's take the opening comments from other panelists.
Thank you so much, Mr. Emmanuel. Thank you so much. We are grateful for that, insight you also added to it in just 30 seconds. Thank you. Okay, we would like to go to Dr. Paulina Iyika. Please, let's have you for, 1 minute as well. Thank you.
All right, so thank you, Emmanuel. Thank you, Anu. Thank you, for other panelists, my colleague on the call. I can see Ibrahim. And also Mr. Mustafa. So thank you very much for giving us the opportunity. I like what Anu said at the beginning, that the audit exercise is not a witch hunting exercise. It's actually for us to be able to ensure that you show us or you bring us to the page of what you did, because of course under the self-assessment regime, the government places so much trust in the taxpayer by allowing the taxpayer to self-assess, right? So after the self-assessment, they will expect that we'll come and, of course, they bring us to the same page and show us what you have done. That's the whole idea of just to ensure that you continue to comply, because the more you comply, the less you have challenge with audits. I think that will be my opening comments. Thank you.
Thank you so much, Dr. Paulinas. Thank you. So I think I would like to move to Mr. Ibrahim Abubakar. So let's have your opening comments. Thank you.
Yeah, good morning, panelists. Good morning, listeners. I'm glad to be here, contributing my knowledge in this session. My opening comments, just as my friend and colleague has said, Dr. Paulinas, we here in FIRS is just mainly about compliance tests. Come to check, and compliance tests might vary. There will be low, mid, and high compliance tests. But it is expected that once you have an audit session this year, following year, your compliance test will drastically improve, taking the comments from the audit visitation. Thank you.
Thank you so much, Mr. Ibrahim. Thank you so much. I would like to go to Mr. Folusho Mustafa. Thank you, and let's have your opening comments.
Thank you very much, Cardinal Professionals, for this opportunity, and my other co-panelists and all the attendants of this webinar. Well, like we all know, tax is statutory, and tax audit is also statutory. So it's an opportunity for us to interact and understand what is expected of taxpayer, and also the responsibility of tax administrators to guide and provide a very smooth and efficient tax audit process. At LRS, we are always engaging taxpayers so that they understand the processes that are required, so that it doesn't stifle their business, and also it doesn't deny us of relevant treatment need to move the stage forward. We are an innovative entity and we keep our taxpayers as priority. So in this webinar, I believe we have to have a conversation around a very soft process to audit and also ensure that taxpayers are aligned with the requirements of it. Thank you.
Thank you so much. Thank you so much, Mr. Mustafa. So I think I would like us to begin this session, fully and by, dropping the questions, asking the questions. So just like Mr. Mustafa said, LRS and FRS, is very innovative. It's not a stagnant regulatory body. We have laws coming up. We have new processes coming up to enable and ensure that the taxpayer, is fully compliant in the best way possible. And not just compliance, also to care for, the taxpayer as well, to ensure, I'm sure for some of us, we've had visitations from either LIS or FRS just to check on, the firm or to check on the individual to be sure that everything is in order. So I would just like to ask Mr. Folushaw that what are the main areas of focus, for LRS during tax audits? And how can businesses prepare for this, this audit exercises? So what's the main focus and how can businesses prepare for the audit exercise?
Well, thank you very much. The tax profile for LRS is quite streamlined. We don't, unlike FRS, that has a lot of expanded tax opportunities. Our scope of audit, of course, has very cost, which is payee, as we all know it, withholding taxes on relevant transactions that are eligible for collection by the state, relevant state tax authorities, levies, penalties, and we also have HORC, which is hotel occupancy and consumption tax, which is under law in Lagos State. So those are the scope of our tax audit, basically, just very simple. And unlike FRS, that has a lot of taxes to cover. We also cover capital gains tax where they are relevant to the state. Of course, these are part of the scope of engagement for tax audit.
Oh, wow. Thank you so much. Thank you so much, Mr. Folushaw.
In respect of how businesses can prepare for this tax, I think it's important. Most businesses, startups or existing businesses, should make sure their reports and financial information are up to date, because we don't like to, make things difficult for taxpayers. Once you keep the record up to date, you comply with filings, you comply with remittances, and every other thing is up to date. I think the tax audit is easy and very smooth for the tax administrator and the taxpayer.
Thank you so much. Thank you so much, Mr. Folushaw. I think in that light as well, I would just like to ask Dr. Paulina Seyika that just the same question that we just asked now, that what are the main area of focus during the transfer pricing audit? So what is the FRS looking at? What are they trying to see? And how can the corporate bodies prepare for this for the audit exercise and the main area of focus? As well, maybe we earlier listed the critical steps, that are to be followed, but we just want you to give us a deep dive into, the area of focus and how businesses can prepare for transfer pricing audit. Thank you, Dr. Paulinus.
All right, so thank you, Anu, once again. So maybe I should just set the context a bit. So audit is audit, right? So, but there are still some distinctions to make. For example, if we were talking about transfer pricing audits, some taxpayers or some businesses tend to assume that it will follow the usual audit process that they are familiar with, or probably what the audits transfer pricing audit teams or audit team is looking out for is, of course, the same thing that the audit, maybe tax audit team, whether it be it LIRS or be it the other tax audit team or even investigation team are looking out for. So the distinction here is that while the other auditors, for example, are looking at how you complied with the law, for example, what does the provisions of the law say about withholding tax on this particular item? What does the provisions of the law says about deductibility of this donation? For example, is it tax deductible? Is it not tax deductible? Why did other tax auditors look at these issues? The transfer pricing auditor is going beyond these issues to look at, in the first instance, are you supposed to have made that payment that you have made? To whom did you make the payment, right? So these are questions that tend to validate or verify the substance of the transaction rather than the legality of the transaction. So that is a clear distinction here. So it's not just about the legality to say, okay, the law has said this and the law has said that. So even where the law has said that you can actually deduct this particular expense, for example, we're looking at who is the beneficiary of that payment and what did the person do for you. Can you prove to us that you actually received such service? For example, you're paying X amount to your related party. Remember, transfer price is about arm's length and making sure that transactions between related parties are carried out in accordance with the arm's length principle. So the related party is located in jurisdiction X, for example, and you have made payment to that related party, purportedly for a particular transaction.
Okay.
So the question is, are you proof to us that related party have actually provided that service that you are paying for, or are you just making payment frivolously, right? Probably in a bid to push profit outside. So the businesses here are expected to keep documentations, right, that will be able to prove to the team that these services were actually rendered, and then adequate documentation in that matter, considering or bearing in mind what we call the volume and the complexity of the transaction. So that is very key. So it's the document is not just the usual document you talk about, let's say the invoices, and they are part of it. But of course, there's what we refer to as transfer pricing documentation, right? Which comprises three elements: the local filing, the master file, and then the C/C. So these three, you must prepare them and in a contemporaneous manner, meaning that you have them as the time the transactions are taking place, such that you don't begin to run from pillar to post when it is time for you to submit those reports or those documentation. So I think I don't know if I'm able to capture.
You have done that. Thank you so much, Dr. Prominence. Thank you. I think I would like to go to Mr. Abubakar now, and we already understand basic things about the audit process. We would like to ask, looking at the way the FRS audit is and the fact that it covers larger and wider tax base and tax nets. We would like to know the primary objectives of the tax audit and maybe even the investigation exercise. We earlier mentioned them, but we'd just like you to do a bit of deep dive in 45 seconds and tell us, what is the objective of the tax audit exercise? What is the FRS hoping to shape? What is that mighty objective to FRS, tax audit? Thank you so much, sir.
Yeah, thank you. I think we at FIRS, the primary objective of a tax audit is to check compliance tests. We're just there to see how compliant are you to the relevant tax laws within the specific tax type. And in doing this, the taxpayer has to be up to date with its records, And in that process, we expect that the taxpayer will have a very grounded consultant that prepares that taxpayer for the audit. That is, before the audit commences, there should be adequate preparation. We in FRS, we have cascaded our taxpayer into about 3 tiers based on our risk. The high risk, medium, and the low. Where we have what we call the large taxpayer, the medium, and the small. The risk level is very high at the large taxpayer paying public, such that I can tell you about 99.9% of those companies must have to be audited. But for the medium, the risk is less, but then based on the available manpower, we do our best possible to cover a large portion of them. But for the smaller taxpayers, we just do some sampling and, because of need, because of their population, And thankfully now we are having some shift from the old regime whereby some taxpayers are being exempted, whereby the level of manpower requirement will not be that enormous. So to detect if the compliance is low, it therefore means that there will be taxes that are not paid, which at the end of the day, will have to raise some additional liability, which will transfer into interest and penalty. Because, you know, for you to agree to be a business entity in Nigeria, you have agreed to all the relevant laws of the land, which includes that government itself will have a stake in that company. So your level of compliance now translates to your remittances of government stake to government at the appropriate time. I will tell you, my co-panelists, like in the past, you will see an audit that didn't take place in the past 5 years. Once you come to audit this company, you realize that the interest and penalty are paid just once. But in the new regime, you realize that if we didn't audit you in the past 5 years, when we come to charge you this additional liability, interest and penalty will start counting from that previous 5 years. So what am I trying to say here? I'm trying to say that the taxpayers, the companies now, will have to look at for good consultants such that you don't wait until FIRS writes to you that you're coming for audit. Tell FIRS, please come and check my books. As you end every financial year, talk to your consultant should approach you. Let FIRS come and check your books. In the sense that if you do that, you have helped the company save its cash flow. Because we have cases whereby in the new regime, you will see the actual tax is lesser than the interest and penalty. So if you're a consultant and you're not speaking to your client to give them this service, that look, don't wait until FIRS come. Write to them to come and do the audits.
Thank you so much, Mr. Ibrahim. Thank you.
Yeah.
I believe that, before I move to another question, I would just like to say, good consultants is, CPS LLP. So just not to say further, we'll just let you know that, it's good for you to, have it at the back of your mind that, like you said, check your books, do your tax planning, your tax management, even before you hear that, the tax man is coming or the auditors are coming to audit your books. And also keep proper records, like we earlier stated, so you don't have to, run up and down to get this reference. So I would like to go back to Mr. Folusho and just to ask this very, very germane question, like every other question, which is that what are the common the common compliance issues that we get to see during the audit process, and how can these issues be addressed before? And so this is just like a follow-up to the question we earlier had, that what are the common issues? Yes, we know that there has to be audit. What are the common issues that LRS sees that come up during the process of audit, or even after or before, and how can these issues be addressed beforehand? Thank you, Mr. Folusho Mustafa.
Well, I need to understand your question. The common issues faced by LRS or common issues faced by taxpayers.
So both sides, both LRS and taxpayers.
Well, LRS doesn't have commonly any issue regarding tax audit, but most of these issues are as a result of non-compliance from taxpayers. Inadequate record keeping, no evidence of transactions, and general obstruction to tax auditors to access their offices. And of course, most of them have very low remittance issues. So these are some of the issues that taxpayers have regarding tax audit. And basically, the issue is that, additionally, the issue is that most taxpayers don't keep up to their reports. And it's a big issue for tax audit. Verification of documents is important so that we don't overtax or undertax you. And it's important we keep advising taxpayers to keep proper records up to date, and also compliance with required remittances other taxes that are due to state. Thank you.
Thank you so much, Mr. Mustafa. So I think I would like to go to Mr. Emmanuel. So as a consultant, we've stated some issues on ground that the taxpayers would most likely have the common issues. So we'd just like to ask you, Mr. Emmanuel, that what are the best practices that businesses can adopt to, ensure a smoother and more efficient and effective tax audit process, be it, with the FIRS or LIRS. And in the same light, we would also want you to speak to how businesses, it's almost like a twin question, how businesses can, best manage their liabilities to remain a going concern. We've seen instances where businesses feel like, just like Mr. Abubakar said, sometimes the liability is even way more than maybe the revenue of that company, or more than the initial tax liability. So how can they manage their liabilities to ensure that the business doesn't, die because of liability payment, or, because of penalty payment or every other thing? So two things, just to go back again. First is, best practices that businesses can adopt to ensure a smoother and more efficient tax audit process, and also how to best manage liabilities for a business that wants to remain a going concern after the audit process. Thank you so much, Mr. Emmanuel.
Okay, thank you very much, Anu. And let me just say, we are the hosts, so it's very fine and okay to allow our other panelists to have the bulk of the time. I believe people are already getting value from the conversation. But if I can just quickly add some thoughts to picking it up from where Mr. Folusho have said, the challenges typically faced by the tax authority when it comes to tax audit are largely challenges that arose by the fact that taxpayers fails to plan adequately for tax issues. You understand? As a business, taxation is one of the most critical elements of your business that you have to have a strategy for. Coming into the Nigerian space or any other place that you find yourself, and from the day one that you're starting your business, it is, very, very critical that as a business, you have a very clear picture of all your tax obligation in the environment you are operating, and you have a clear compliance strategy, as a business to comply with all the tax requirements. If you don't have this, that is whenever the tax authority comes around, you are caught unaware, you don't have information, and then you lose guard, and then things will not be able to go in the direction you want to go. I also like to mention that, having determined your tax strategy, it's also important that you put in place measures to ensure that, you are very up to date with everything that you have said you're going to do, which are part of your strategic action in ensuring that you are fully compliant and then you are ready for audit. Like we mentioned earlier, keeping your record up to date is one of the first things you can ever do as a business to be tax compliant. You can never be tax compliant if your records are not up to date. You don't have an accounting system, you don't have an invoicing system, you are not keeping your record, whether in the cloud or hardware somewhere, in your office. There is no way you can demonstrate to the tax officers that you are compliant, if you don't have all these things in place. So that proactive, approach, that posture to see to it that you are implementing all your strategic actions is one of the things that can put you in a position of strength in handling your audit matters like a pro or like an expert, And if I can also just add to it to say that, look, you must also have at the back of your mind a clear picture of your audit outcome. You understand? And Anu mentioned something when she was making a presentation, she said something about tips about having, successful audit, as a taxpayer, it is very inappropriate, it is very wrong for you to enter into an audit exercise without you having a fair idea of your issues, and that makes everything, very, increase an imbalance in the audit process. So as a taxpayer, it is important that you are aware of your issues as a taxpayer and clearly, have a plan on how to address those issues when an audit exercise comes. You must also have an idea of your maximum liability, because that is what guides, whatever you are doing. And that's where a consultant has a role to play. Maybe a firm like Cardinal Professional Services has a role to play to help you, evaluate what your maximum tax liability will look like, having looked at your peculiar or bespoke circumstances, and then, help you, design an audit strategy, to manage that. I tell you, whatever an audit outcome you are interested in as a taxpayer, tell you, if you are very clear about your strategy in the audit exercise, you won't necessarily prolong an audit exercise. You understand? Because it is not even in your interest for an audit exercise to keep prolonging, because you are accumulating interest and penalty. You understand? So having a clear picture of your issues and your approach, whether there are documentation gaps or there are no documentation gaps, it is incumbent on you to know this proactively and then engage, an expert when necessary to help you, walk through the audit exercise in a way that you are very efficient. So let me stop there for time.
Thank you so much, Mr. Armando. So for time as well, I think I'll just be reminding us that we have this time frame to answer each question. Thank you. I believe Mr. Folusho is still here with us, although I can't see his video on, but I believe he's here with us. Okay, thank you so much, Mr. Folusho. I also want to bring a question back to Mr. Folusho before I go to our other panelists. And before I do that, I would just like to remind our participants that, there's a link where you can drop your questions so the panelists can attend to those questions before the end of the session. So while we receive your questions, we've been speaking to documentation, we've been speaking to proper planning. I would like to ask Mr. Folusho, because sometimes or oftentimes we have seen in practice that one of the issues that taxpayers have with respect to pay is maybe the status of expatriates or the payment or pay issues related to expatriates. So we want to ask Mr. Folusho, when I'm saying we, I'm saying that I believe I'm speaking the mind of the participants, because this is their question, that how is the LRS approaching the issue of expatriates, that's expatriate personnel on the payroll? So if you have an expatriate personnel on the payroll, so how will LRS approach that particular circumstance, and what are the statutorily required processes that are meant to be put in place or to be fulfilled by businesses or personnel to ensure that they are fully compliant with payee requirements and other regulatory compliance? So this is majorly the big issue that some multinationals have, the multinationals we have here as participants, they have actually, which is the issue of an expatriate. What are they supposed to do to ensure full compliance with payee requirements while they have expatriates on their payroll? Thank you so much, Mr. Folusho.
Thank you for that question. It's quite a very sensitive question. Well, expatriates that are engaged in Nigeria, we can categorize them into two, some on permanent basis, some on temporary basis. Those on permanent basis, of course, there's a law that guides the expatriate taxes, which is Section 10, Peter. And their income is subject to tax in Nigeria as long as they are derived. But now, what we advise taxpayers, you keep records up to date. When they enter the country, their contract letter, the amount of remuneration you paid today. These are all, as long as they're earning those remuneration period, these are all taxable items. Also, in terms of the immigration status, most taxpayers, once an expatriate country, they don't go to they don't provide the evidence, the petition form that they have left the country or they have left their own engagement. These are the issues we face. So once you are not able to provide such information, we'll subject that as public tax. But I've always advised taxpayers in capacity that it is important to keep your records together, especially as regards your expatriates. Expatriates come into this country to earn revenue. Once that revenue is earned, they are subject to tax, and the information about Administration Status, ECMR, all these are important for the tax administrators to look at, to check that they are no more with you or they have moved out of the country. So these are some of the issues we face in terms of expatriate. But normally, expatriate income, as long as they are gainfully employed and there is a permanent establishment, a company that's paying those remunerations, they're supposed to pay tax to Lagos State. So the only challenge is putting your records together regarding expatriates in terms of immigration status, conditions of employment, conditions of service. So once we are able to verify all these items, it's important that we agree and they are taxable, they are tax appropriate. Thank you.
Thank you so much, Mr. Folisho. Thank you. I would love to ask Mr. Ibrahim Abubakar. We've spoken a lot about the audit process, the audit exercise process. So we'd like to ask that after completing an audit exercise, what are the measures that businesses should put in place to ensure ongoing compliance with tax laws? What are the things that that entity should put in place to ensure compliance?
Yeah, thank you. Like I've said earlier, in recent times, there's a paradigm shift. Honestly, for us, our major KPI is to, increase the compliance level of our taxpayer. And I'm pushing the buck now to the consultants if they are part of this panel. Paradigm shift should now set in the sense that there should be continuous conversation between the taxpayer and the consultant. The consultant should engage our taxpayers going forward, such that from the point of major transaction, they should ask their consultant, what is the best possible route to pass on this transaction, so that they get first-hand advice on how to deal with the tax issue before those transactions are actually consummated, such that their exposure will be minimized. So we in FRS, we don't love situation whereby until we now come to your premises and I say, okay, they are found wanting for XYZ amount of money. We wish a system whereby there is a conversation between the consultant and their client on transactions, and those taxes are dealt with before they even land up their transaction for the year, such that by the end of the year, what they are paying is minimal. And when audit comes, it will be minimum or no liability. Though it's not possible to say 100% there won't be liability, but the compliance level should be very, very high. So it's all about conversation. Because if consultants fail to carry out this conversation with their clients, believe me, if you don't have an educated client, for instance, you come to meet after audit, you will not present to a client that we have this liability for CIT, 10 million, for instance. We have interest and penalty, 15 million. If you're not careful, you will lose that client because you're going to find it difficult to understand. So it is the service, it is now in the interest of the consultants to carry out this conversation with the clients that once you want to do this XYZ going forward, please consult me, I'll give you this advice. So those are the issues. Thank you.
Thank you so much, Mr. Brands. Thank you. I would love to go to Dr. Polinos in that same light as well. We would just love to ask that what are the recommendations you have for businesses and entities to improve their transfer pricing practices after an audit to avoid future issues?
You may have to come again with the question. I'm not sure.
Yes.
He got it.
Yes.
All right. So, sorry about that interlude. So, yeah, so I heard you quite well, Anu. So I think, first of all, when you talk about what the expect or my recommendation should be for companies to prepare, maybe after post audits, I think that's what you're referring to, right?
Yes.
As an after audit. Yeah. So the whole idea, I'll still want to also lean on what others have said, especially what Ibrahim just said. Taxpayer education is important. And I also see audit as part of education, right? Because throughout the audit process, I've seen what we've seen in practice here, that some of the issues we flagged, or that some of the transactions that became subject of additional liability, what we realize is that taxpayers, a number of taxpayers will not engage in such transaction. Even if they engage in that same transaction, they would, of course, structure it in a better way, right? So what that tells you is that there's a learning taking place, right, in the process. So there's need for taxpayers, all stakeholders, that is the taxpayers themselves and the consultant, especially when it comes to transfer pricing that involves potentially high liability
and technical issues.
And technicalities, yes, because I'm not sure there's any tax audit that has yielded as much as transfer pricing, even globally, when we're talking about over $3 billion raised by US IRS on a single transaction, on a single company. So I attest to how risky it could be if you mismanage your transfer pricing issues. But again, learning happens, and I will expect that the taxpayer should continually engage with the consultant to make sure that the transactions, as they are happening, they are keeping those documents and putting them in place, so that in the subsequent audits, you have to fall into the same challenges you fell into the last time. So that will continue to enhance your compliance. So again, one thing again I must point out is that Ibrahim said something very important. He said there's no way you will say there's no liability. There are sometimes taxpayers, even by their attitude to the whole process, creates suspicion even on the side of the tax authority. So because of course, when you begin to shy away from responding to requests for documents, for example, and then begin to hide, of course, you're forcing the tax authority to begin to look at things from the other way around and to begin to suspect that there's something you're really hiding. So there's a need for transparency in whatever the taxpayer is doing. If you are conducting your businesses and your transactions in a way that is in line with the regulation, transfer pricing regulation, or in line with the law, I don't think there's anything to hide. When there's a request for documents, those documents should be in place, and then you should be able to submit. I can tell you experiences we have where we were asking a taxpayer for a document as simple as an agreement to sign with your related party. You're engaging somebody to carry out a transaction or carry out certain services for you. Even normal business practice will require that you enter into some sort of contracts, and they were asking you to share that contract with us, and it's taking you 2 months to provide such contracts. 2 months to provide such a contract so that tells you already there's a problem. And then so to avoid all of these things, it's important that the taxpayer continue to maintain what we call contemporaneous documentation, and then to keep, put them in place even ahead of any audit or ahead of any request. Thank you.
Thank you so much, Dr. Polinos. Thank you
I
so
know,
much.
I don't know if I can just quickly add a thought to what Dr.
Yes.
Polinos has said.
Yeah, yes.
I think what Dr. Polinos has highlighted also emphasized, the need for taxpayers to proactively build a audit defense file. You understand? Because that posture helps you to proactively review all your issues, both from a corporate tax perspective, personal income tax, transfer pricing issues, and you have a file, at the end of every year or at the end of every period, where you are putting all the information that you plan to defend, your compliance status with, many people may not know how to go about this. We've seen in the past where multinationals, large corporations, they engage consultants to help them build a audit defense file. But what do we mean by audit defense file? It's simply saying that, you have looked at your transactions for the year, be it VAT, withholding tax, you have your schedules, and you collate everything in a particular location, and whatever supporting document that you think you want to use to defend your compliance status, you proactively also put it in, such that when an audit exercise comes up, it's not that time that you are now trying to come up. It all speaks to you having a proactive, strategy. So, like I said, just to add to what Dr. Paulinos has said, building an audit defense file is one of the best way you can proactively anticipate issues and see to it that you have enough documentation to defend. I've seen instances where, because taxpayers did not plan in advance, although they don't have to pay that liability, but the request from the tax authority caught them unaware, and they were unable to get the necessary documentation to defend what they are claiming. And at the end of the day, they have to pay additional liability, because from the perspective of the tax authority, they have to also put their file in order, you understand, for them to allow whether that expense or that's something to pass. So it is so important that, at the end of any financial year, taxpayers sit back and say, can I do this myself? If I can do it, I proactively build my audit defense file. And if I can't do it, do I need to engage an expert to help me do that in preparation for any time the tax authority wants to come, to audit that particular period? I think it's just, it's good to have that thought to it.
Thank you so much, Mr. Emmanuel. Thank you. I think I would like to...
Sorry, I know I need to mention that Mr. Felicia needs to join another meeting in 7 minutes. So if you have any other question for him, you may want to take it.
Thank you so much. Thank you so much. I think I would just like to check the questions that have been dropped in the Q&A section. If we have questions, particularly to LIRS, so we can tailor it to Mr. Felicia before he leaves. And I can see that some people are sending direct questions to my inbox and via the chat. Please use the link that has been posted so that we can, take everyone's questions. So I would just like to ask back end whether there are questions that can be directed to LIRS before, Mr. Felicia leaves us. While we wait for that, we'd just like to ask Mr. Ibrahim Abubakar that when would a typical audit, when would it generate to tax investigation? When would it become a tax investigation? Because we know that there's a difference, like I said, between audit and investigation. So when would a tax audit evolve into a full investigation? So Mr. Ibrahim, let's have you take up that question. Thank you.
Yeah, thank you. For audit to become an investigation issue, there are a number of factors. For instance, there can be triggers. National Assembly can decide to say, FIRS, go after this sector, want an investigation, what is going on. The presidency can send a trigger. And again, within our own system, we have a whole intelligent gathering mechanism. For instance, I'm in audit, my colleague, Dr. Paulinos, is in transfer pricing. I may sense a transfer pricing issue. I will share with him. They will pick it up from there. And again, we have some peculiarities. Some company might be in perpetual loss. Keep being in perpetual loss. You understand? That might be another trigger for investigation. More so, investigation, unlike audit that will have 6 years span, investigation can be broadened, can be a very broad-based issue, such that all the affairs of that company and the personnel will have to be looked into. Thank you.
Thank you so much. To that question again, I would still like to ask before we move from that question. The key part of it is there any way that businesses can protect themselves to not find themselves in that instance? I know you already said when there's a perpetual loss, when there are certain triggers. Of course, you also mentioned earlier that when tax evasion is suspected, but what can be done? Maybe going to be a trigger for a tax investigation. So how can they protect themselves and not fall in that particular state?
It's very simple. It's just to come clean, declare your tax liability to whatever relevant tax authority, be it state tax authority or federal. I can assure you that between FIRS and Lagos State government, you have an MOU For instance, we're taking out audit, we discover there is an expatriate who has come into Lagos, has done XYZ, we share. So it has to be compliant and come clean. Like, in fact, if you had a minister of recent giving out a window that come out, pay your relevant taxes, bring in those your cash into the system, you're going to go clean. That's a window, again, from the authority, because the Minister of Finance oversee FIRS. So it's just about come back, engage a consultant. I have XYZ. How do I go about you? They'll advise you. Consultant will tell you, okay, you have capital allowance to claim on this income. You have this activity. You can do this way, do this way. You bring out the compliance level to be high. And at the end of the day, you have your tax clearance to be proud of.
Thank you so much, Mr. Thank you so much. Okay, so I think I would just like to direct this final question to Mr. Folusho before he leaves us for this for another meeting that I think he has to be, like Mr. Emmanuel said. So I got a question asking that how do one manage an auditor who obviously has a target and is therefore desperate to establish fault, and in that light also manipulating the interpretation of tax laws because he must raise additional assessments and penalties. I would love both Mr. Emmanuel and Mr. Folusho to answer this question, but first I would love Mr. Folusho to answer the question while he also gives us his closing remark. Thank you so much, Mr. Folusho.
Well, I would like you to restate the question because your signal a little bit went off. I couldn't hear the complete part of that question.
I'm so sorry.
Just restate the question because your voice was,
Okay, thank you. So the question is, how do one manage an auditor that is obviously, chasing targets and therefore trying to establish desperately trying to establish faults, and also manipulating the interpretation of the tax laws because he wants to ensure he raise additional assessment. It's to the extent that people are believing that even a tax audit cannot be closed with a new liability. That's what somebody said. So how do you manage those instances, which I would say I don't think is true, but I would love Mr. Folusho to answer the question.
Well, you have responded. I don't think it's true. I think that such cases, I think it's important they take it up and advise LRs on that position if someone is trying to manipulate the process. Well, most of our tax auditors are well trained. We have levels of supervisors and team leads. So once such issue comes up, it's better you escalate it to that unit. In terms of trying to scale up targets, well, we all have targets. So, and it's a cat and dog thing, if I may use that word. The taxpayer doesn't want to pay adequately, and the revenue administrator wants to collect adequate revenue. So it's a game of having knowledge and having understanding of what's expected of both parties. We in LRS, we ensure that we keep innovating our process and transforming our process digitally to ensure that most of these one-on-one engagements are reduced. Right now, we're developing a lot of platform within the LRS. Audit platform is coming very soon, where taxpayer can have interaction with us about their tax audit processes. It's going to evolve over time if such situations should be addressed, like I said earlier, by escalating it to relevant levels of authority. Thank you.
Thank you so much. Thank you, sir. We'd just like to have your closing remark before we let you go, sir.
The participants are our taxpayers. I believe we have a partnership that keeps working in Lagos State. Lagos is an evolving mega city. You can see the transformation that's going on. And we're also trying to ensure that we optimize our revenue collection. We would like to keep appealing to taxpayers to keep being up to date on their records. File your taxes on time. Keep clean records, evidences. We are not there to witch hunt you. We're just here to verify what is due to us. And if at the end of the day, nothing is due to us, you get a clean bill. So it's important that we keep these processes in check and ensure that we are also always monitoring our tax exposures. Tax is statutory and is for the tax advisor to collect the right taxes. We don't want to overtax or undertax any taxpayer. We're here to listen to them and also engage them in understanding the processes. Thank you very much.
Thank you so much, Mr. Felicia Mustafa. It's been a great pleasure to have you here on board as a panelist. And
thank you very much, sir.
Thank you so much, sir.
Thank you very much. Thank you, my co-panelists. I appreciate everybody. God bless you. Have a great week. Thank you.
So the panel session is still on, and I would like to say that for the questions that are just dropped directly, we may or may not be able to attend to those questions. That's why we provided the link so that all questions can be attended to via the link we already provided. So I think I would just like to ask backend for to share the questions that we have that have been sent to the link. Let's see them and let's try and take off those questions during this session.
No, I don't know if I can just quickly add to a comment Mr. Felicia made on when you experience a tax auditor that seems to be desperate to raise an assessment and wouldn't want to listen to the taxpayer or the provision of the law. I think the first thing a taxpayer needs to understand is that you need to be very sure whether you are on the right side of the law. Do you understand? You don't assume that a tax authority is just being adversarial without you establishing the correct position of the law. And if that is still the case, there are measures within the FRS system, LRS system, where issues like that, can be escalated. I will put it out on this platform today that it is absolutely wrong for you to succumb to any pressure that is against the provision of the law. You understand? And if at all you are not making progress with that particular tax officer, the person has a supervisor, there is a director, that things can always be escalated to. In fact, some of these tax authority, I'm aware of FRS, there's a legal department that you can write to help with the interpretation of some of these issues that you feel the tax auditor is not allowing you to have your comfort on, and that's what I want to add to that. Never succumb to any pressure, in an audit exercise. Be very clear about your position and escalate, whether directly or with the help of your consultant, with the relevant people, within the service. I would like to put it out there. The objective of the service is not to kill business. You cannot be out there to kill the birds that is laying the egg. You understand? And as much as possible, the tax authority also want to work with the taxpayer to see that, everything is managed in the sustainable manner, but not at the expense of loss of revenue. You agree with me that this revenue are critical to running the government and putting in place all the necessary amenities, that is needed, for day-to-day living within the society. Okay, I think we can go to the...
Mr. Emmanuel, please, can I have one or two comments to that last discussion?
Yeah.
We in FIRS, we have our ethical issues in our human resources procedure, that where any staff bring us such erroneous tax liability to a taxpayer, that will constitute a serious misconduct, which can lead to dismissal. And again, I want to emphasize that the tax system in Nigeria is very clear. It's a procedure. If a taxpayer is not comfortable with any liability, the taxpayer has a right to object. FIRS does not have the final say on any liability until the taxpayer agrees to say, okay, this liability, I can no longer provide relevant document to state that it should not stand. But when the taxpayer disagrees, he has the right to object. The procedures are there. TAT will see into the issue. If the taxpayer is right, the liability will be adjusted. When FRS is correct, the liability will stand. Thereafter, if the taxpayer still feels that there's something wrong, it goes to Federal High Court, to the Supreme Court, on the final decision is made on the issue. So it is not correct to say somebody will come and raise a liability. We just want to just raise liability. It is not in our practice. And we all have supervisors, even with our in-house. Once the first objection comes in, we have offices that looks into it, different from the team that went to the field. They will look into the objection issue and see the merit of all issue. Drop what is droppable, what cannot be dropped. It stands.
Very spot on, sir.
Yeah. Then the other issue that I want to state is I've forgotten. Yeah, continue, Mr. Emmanuel. When I get to
don't worry. Let me I know I will come back to you. I will return the meeting back to you. But I want to check something quickly for the benefit of our audience with me, the Dr. Cornell. There's this, in quotes, myth, don't let me call it fallacy, myth, out there that say, in Nigeria, you cannot have any transfer pricing audit without any liability, and the reason most people say that is because, the time investment in auditing the process, or maybe the KPI of the transfer pricing division in the transfer pricing division is not supposed to have a budget, and that kind of, changes the behavior of the tax audit on the exercise. I just want you to help us demystify all of that, that. Have you guys been able to conclude any exercise in the past without any liability? Or are there, additional comfort you like to put out there, concerning these myths going out there?
All right, so thank you. Thank you, Manuel, for that question. So I followed the conversation, starting from when Anu asked the question, and then, of course, to when Mr. Mustafa spoke, and then Ibrahim, and then even your own comments. So coming to transfer pricing, yeah, so what you said is what is out there, I believe, that you cannot come to this office and go without a ticket, something like that, without a bill. So, but to put the thing in context, you see, when you are conducting your transaction, so we have, for example, we have about 5 transfer pricing methods that are prescribed, of course, in our regulation. And then, of course, we also do have the system method as well. Then these methods, of course, can be, the taxpayer is at liberty to select any of this method for his pricing of his own transaction with the related party. So you're at liberty to select any of the methods. And then, of course, the regulation has also made it very clear. If you look at Regulation 1610, that's Regulation 16, subsection 10 of the Income Tax Transfer Pricing Regulation 2018, that the onus of proof that method you have selected and the entire process you have followed, all of that aligns or brings your transaction to align with the transfer pricing regulation. So basically what I'm saying is that the onus to prove is actually on the taxpayer in the case of transfer pricing. So if the taxpayer has kept enough documentation, has maintained enough documentation contemporaneously to justify or to prove that transaction, that method he has selected, or the transaction he has carried out, aligning with the arm's length principle, meaning that this is the same thing that has happened between him and his related party will be the same that will happen between 2 unrelated parties. That is what the arm's length is all talking about. 2 unrelated parties have priced the transaction and have arrived at amount X. 2 related parties, you'll be able to justify to us that your price is in line with the market. So if you have kept the documentation, in that line, we will not impose any liability. We cannot create liabilities from anywhere. So it is where what we see in reality is that most times the taxpayers have selected a method that he believes is the most appropriate, because the OECD has said, even the OECD, which is the overall regulator of this international tax business, had said that the taxpayers are at liberty to select any method that is most appropriate. So, and remember, most appropriate can be very subjective. So So the tax authority also have an understanding of what should be applied in such circumstance. So again, it's all about having sitting on different side of the table. But in most cases, or in every case that we have a liability, the taxpayer often agree that, look, that he agrees that our position, is right. And then, of course, there's no need to begin to feel that we actually impose. The only situation where you can say that you are not expecting to have a divergent view or that crystallize liability is where we have an APA, for example, in place. Just few days ago, we're discussing APA simply means advanced pricing agreement. This is an agreement between a taxpayer and the tax authority in advance of what the transfer pricing method should be or what the pricing modality should be. So you have agreed with the tax authority in advance that this is what it should be. So in that case, within the period covered by the APA, the tax authority cannot even conduct an audit for that particular those particular covered transactions, right? So in that case, that's the only way you can say there's no liability. But as long as we have differing views about what transaction should and what method should apply to what transaction, definitely you're going to have. So the issue of having targets, in an audit environment, generally it's a global question. So I was in a forum where this came up, and then a number of countries have said, well, for their tax audit functions, whether it's tax audit, whether it's transfer pricing audit, and all, whether it's investigation, I mean, there are no targets for such functions, right? Because they are essentially to ensure that the taxpayer complies with the law. So the KPIs are tied around compliance. And that is what Mr. Ibrahim has also said recently. We're moving towards the KPIs for all these functions to be tied to compliance rather than monetary targets. And I'm sure that as we continue to evolve, we'll continue to deal with these issues. But again, that notion that because of targets, a tax auditor or a TP auditor will want to violate the law, I mean, that will not even happen because there are various peer review happening. Ibrahim has said it, that peer review, you are a scheduled officer, you have a team leader, the team leader has a group head perhaps, and the group head has a head of audit or head of division. So there are different processes that we have to look at. Hey, we keep checking this to ensure that whatever is going out to the taxpayer eventually aligns with the law. Thank you very much. I know I take some of your time, but I think it's important to.
I was trying to hide it, but maybe I was not able to. Okay, thank you so much. Okay, I think some of these questions we have here. Thank you everyone for dropping your questions. The first question, I believe we've answered them. That's the question from Olaide. Thank you so much. The second question as well, we have sufficiently, exhausted that question. That's from Olalewe Babashola. Thank you so much. We have a question from an anonymous person which says that can FIRS put a system in place to ensure that audit is done, on an annual basis? I guess this question is vetted from where, Mr. Ibrahim was explaining that, if you have penalties dating back 5 years, you will still have to pay those penalties, and the penalty and interest for those backlogs will also still apply. And, it's going to graduate to another amount that you never even expected. So I think I would like Mr. Ibrahim to just answer this question just in 30 seconds, because I know that it's a straightforward thing that he would just tell us. So Mr. Ibrahim, please, let's have you. Can FIRS put a system in place to ensure that audit is done on an annual basis?
Yes, like I said earlier at the opening remark, we have about 3 layers of risk. Now, if the person asks this question, if his clients fall within the category of a large taxpayer, I can rest assure you that the audit will be done on an annual basis. Of course, it's a manpower issue. Like we have evolved, for instance, the first audit on the self-assessment report or filing is the tax promass. The tax promass is configured such that itself can raise an additional liability. But the visitation of staff to your premises. Now, if those companies are within the category of medium tax and the small tax payers, of course, there are challenges of manpower. Of course, you see recent publication of FRS trying to recruit more hands. So I believe that answers the question. But however, if you have a client, you have to be proactive. You quickly help your client to write to the tax authority. Please come over for this audit. And I can rest assure you that they will oblige, because we in FRS, once a request comes to your desk, you have within 28 to 48 hours to respond, or you have to explain why you did not respond. So if that request comes to the tax office and it is acknowledged, you rest assured that we are going to respond. So that's the way to go about it. Thank you.
Thank you so much, Mr. Ibrahim. I think I still have another question from Olale Babashola, and he's asking why FRS doesn't accept an input VAT as an offset against output VAT. Is there a change making input VAT final? Why is input VAT not provided for in tax promax? I think
if I can just
yes.
let me just quickly extend that for time.
Yeah.
The provision of the VAT Act is very clear on, businesses that can claim input VAT, and I think it's limited to people engaged in manufacturing business and distribution business for goods only. So if you are into service provision or otherwise, you may not be able to claim input VAT. The law provides that your input VAT should be expensed alongside your operating, expense, or capitalized in the case of a capital expenditure. I think that is the provision of the law. With tax promas, I think the provision for input VAT for manufacturing and distribution folks have been addressed. And if you are still having any issue with claiming your input VAT, if you are a manufacturing concern or a distribution concern, you can reach out to your consultant, or you want to reach out to hospital. Let's see what the issue is, and we are in a position to assist. So I don't know if Mr. Kwakasti want to add anything to that.
Yeah, maybe the person asking the question, the person is looking at service industry. Based on VAT Act, the service industry does not have input claim for now. But the new bill before National Assembly, is trying to introduce the input claim for service industry. For instance, you are an hotel, we just come and say, okay, you sold this room for 5,000, VAT 7.5 on 5,000. There's no, say, maybe the bought soap to wash the sheets, all this. No, you understand? So you bought diesel to run a generator, you want to claim. No, all those ones, those inputs you suffer on those items, you are allowed to expense it in your P&L. Well, that is it for now. But I believe if the bill before the National Assembly is passed, we begin to see that in other clients, there is input claim in service industry, but Nigeria for now.
But until the law is passed,
yes.
If you are following the news,
yes. And again, there is a threshold issue. This 25 million. You understand? If you are below the 25 million, you can't come and say you are claiming input because you are not paying this VAT.
You are not even vatable.
You are not even vatable. Don't come and say you are claiming one input VAT. So those are the issues which the person has to understand.
Thank you so much.
Okay, can we quickly, for time, because we are running late and you need to wrap up.
Yes.
What other question?
And I wanted to direct it to Dr. Paulinus, and then the last two questions to Mr. Emmanuel as a consultant. So I believe that Dr. Paulinus is still with us.
Okay, maybe you take my question.
Yes,
I'm here.
Okay, thank you, Dr. Paulinus. So somebody is asking, how do professionals guide against assisting tax evasion or tax avoidance, and what is the level of legitimacy of the mediation process?
Yeah, so I think I'm trying to understand the second part of the question, talking about the legitimacy of the mediation process. But again, the first part, which is on how can professionals, or how do professionals guide against assisting tax evasion? I'm sure Emmanuel will be in a better position to address this, because he is the one that sits on that other table that provides advice. He knows the kind of advice he will provide to taxpayers, whether it is to avoid or to evade. Of course, which I believe we all understand the differences. Okay, so maybe I'll allow Emmanuel to address that part. For me, I think all about ensuring that we all fulfill our obligation. Yeah.
Thank you. So I think
Okay,
Mr.
as professionals,
Yes.
I think the ethics of the profession is very clear, and whatever you're doing as a professional is expected to remain within the ambit of the law. You understand? And it will be out of place for any sound consultant or professional to advise a taxpayer for tax evasion. You understand? As much as possible, I think the best conversation you will get is how best to optimize your tax position within the provisions of the law. It may border within the question of morality or not, but not, a professional is not expected to advise anybody, in the zone of tax evasion. So the legitimacy of whatever mediation process you're doing is guided by your code of ethics, within the professional space and what the law is simply saying. I think that would be the answer, to that question, if we can just move for time. Yeah. I am not sure we can take more questions. I can see more questions popping in. I know, is there any way you can stop,
I think even if the questions come in, we take them
Yeah.
after, we can just relate to them after. That's why you have to scan the QR code displayed so you can reach out to us. But now, please, let's take this 3 questions we have. We would love Mr. Emmanuel to take the first 2, while I would direct the last question to someone else, another panelist. So please, it's a question on both business advisory and tax related. So we'd love you to answer them as a consultant.
So I have on my screen, are you speaking to a company that changed from a business name to a limited liability company, claim capital allowance for capital expenditure incurred as a business? Okay, so you need to tidy up the legal, aspect of that change. Are you incorporating a separate entity, or is it the same entity that is transiting to become an LLC? If it is a separate business, there has to be an outright disposal from that initial business to the new business. You understand? And it's until that is when you can continue to claim capital allowance based on the tax written down value of that initial asset. I won't dive deeper, but if it is still the same business that just changed name, and you still have the same record that just changed form, maybe it's ABC business name before that just changed to ABC Limited, still the same business, then you may be still be able to continue your record keeping, only that the tax authority that will be responsible for some of your tax affairs will then need to be changed. Overall, this is not a platform to give a professional advice. It is best that you document the details of the circumstances so you can get an opinion that looks into the wider implications of the arrangement and advise you accordingly. So the second question says, when a company buys over another company and that company has a backlog of unpaid taxes, with the new company the liability to pay the liability, I think it's an emphatic yes. You understand? Before you are even able to complete, the takeover process, it is expected that you reach out to FRS, to approve that acquisition, and one of the things that FRS will do in the process of approving the acquisition is that you will have to issue a statement of guarantee that whatsoever liability that the unsurviving entities have, you have to take it over. So you will need to be responsible for the tax liabilities of the entities that are no longer existing as a surviving entity. Okay, so I think I know just allow Mr. Abubakar to take the last question and we can take our final thoughts.
Yes, please.
On the last question, what is the purpose of desk examination conducted by FRS if they will still perform tax audit according to their timetable? Well, the purpose, the power is derived from the Establishment Act, and the purpose is to check the first level of compliance. And, like I said, tax promise itself is a compliance test. Once you put figures there, for instance, you have your depreciation, 10 million, and we are seeing on tax promise 4 million. The person do the desk review, right to you. Your computation is not correct. You have additional liability to pay. However, on that desk review, they don't have the power to call for additional document or third-party document. If they do that, tell them no, come for normal return audit. That is our procedure internally. And again, the desk review has to be strictly on the current year. For instance, now you have filed for 2024 accounts. Desk review will take place on 2024 account if you have filed. Then once it is beyond that year, it's only audit that can come. If any desk review report is coming there, tell them to come for audit. So these are powers from the Establishment Act. So like I would always tell anybody, tax is about law is about tax. Thank you.
Thank you so much, Mr. Ibrahim Abubakar. I think I would just like to take the final comment of Dr. Paulinus before we end the session.
Yeah, so I think
sorry, let me add to it. Whatever liability is paid on desk review, if audit come, that amount will be less from the audit liability to come to a new position. It's not as if desk review liability audit will not become additional. No, this has been paid during self-assessment. This was paid during desk review. Now audit has this. You have to less it to come to a new position. Thank you, Mr. Doctor. Please go on.
Thank you so much, Dr.
Paulinus. Yeah, I think, thank you, Ibrahim. Thank you, everyone. But just to add a bit of, before I just do my own closing comment. So I think the whole idea of setting up the desk review process, even those of us that somehow also both in practice, also have some sort of academic side. So when you send out a paper for publication, there's what they call desk review. So that desk review is actually to ensure that your article aligns with the stated rules or the stated or terms and conditions of the publisher. So if it doesn't align at that point, it can be rejected at desk review level. I mean, that is what desk review is meant to, just to make sure it checks the arithmetic accuracy of the returns you have filed, to ensure that everything that you have done is in line before it's accepted. I mean, that has been the practice even before introduction of automation, before the tax formats and automated systems. So it's just to make sure that everything is in order before. So audit is just a standalone process that came in together with the self-assessment regime, right? Such that you have self-assessed yourself, somebody has to then ensure that or validate what you have done or invalidate what you have done. I think that's the whole idea. So it's been a wonderful time for me. It's always an opportunity for us to educate and ourselves and educate taxpayers, of course, on their various obligations. It's my belief in the FIRS that the more educated the taxpayers become, the more compliant they automatically become. So that's our understanding. That's how we'll continue to avail ourselves, in such opportunity or such to engage with the taxpayers and, of course, the other stakeholders. So thank you very much, Cardinal Professional Services, for always calling on us to weigh in some of these issues. And then I believe that especially in areas bordering on transfer pricing that is always gray to a lot of people, the more we continue to engage like this, the more it gets, I mean, the better it gets, even for both the FIRS and even the tax consultant and the taxpayers. We're all stakeholders. So that'll be my closing remarks. So thank you very much once again. Thank you, my co-panelists, for all of the thoughts we've shared. Thank you, Anu, for wonderful moderation.
Thank you so much.
Also done. Thank you.
Okay, thank you so much. Before I move to, Mr. Ibrahim Abubakar giving us his closing remarks, I just want to, put it out here again that this is like a tripartite relationship of both the taxpayer, the consultant, and the taxman, getting the liability and the payments done. So we just want to drop this advice here that, if you currently have an ongoing audit, or maybe ongoing audit, or you call it open audit, or new audit that you're yet to, you don't know what exactly to do or how to, treat that audit, we are always here to partner with you to, to assist you to help you toward this particular line, particularly as it relates to, audit and tax compliance in itself. So you can always reach out to us. So you have the QR codes, you can scan them, like I said, like we'll be repeating, so that you can get through to us, and we can also be able to reach out to you. So let's have Mr. Ibrahim Abubakar give us his closing remarks. Thank you, sir.
Yeah, thank you. First and foremost, I want to thank Cardinal Professional, Mr. Manuel, and our sister for this wonderful opportunity to interact with ourselves and the taxpayer. And for us in FRS, we're all out about compliance, and by this exposure, this professional services giving out now, you're equally helping FRS indirectly to increase compliance level. I thank you guys for that. I appreciate.
Can we see Mr. Abubakar? Okay. Okay.
Hello, you can hear me?
Yeah, we can hear you now. We hear you.
Okay, thank you very much.
Okay. Anu seems to be frozen. So I believe I'm supposed to be the next one to give the closing remark. So let me just use this opportunity to appreciate all our audience on the webinar. Thank you for joining. It was a steady attendance. At a point we see over 100 people on this webinar, and for us, I think that is a good number. Like Anu has rightly said, we are partners in ensuring that all stakeholders makes the tax environment better and efficient. And that's why we strive all the time to bring in conversation from the regulators and also from the perspective of the taxpayer. We would love to consolidate on this, in our future editions of the webinar. So reach out, connect with us, so that you can get updates on our next webinar, our newsletters and insights also. Like Anu rightly said, we are better positioned to support you to navigate the issues around your tax and investigation issues, LRS, FRS, as the case may be. Not only do we pride in our technical strength, we also believe that our relationship with the tax authority can help us also to be better efficient, in managing all the issues that may be attached to your audit or compliance issues. So thank you once again. I don't know if Anu is back, but I think it's a good point to call it a day. You made it a great experience from our panelists. Thank you very much, everyone. And also from you, the audience. You can just drop a comment if this has been a value-added session. We'd love to hear your feedback. Thank you. Anu, do you have any other thing to say? I've wrapped up on your behalf.
Yes, I said that. I'm grateful for that. I'm grateful. Thank you so much. I just want to say thank you to everyone, and we'll be having another, webinar session very soon. I don't know if I can say in the next 3 months. You should be expectant, and we'll always reach out to you. I believe we have your email addresses, so don't be surprised if you get our mail to let you know that we have another webinar session coming up very, very soon, and we trust that you would also be present, because it will be as insightful as this and even much more. Thank you so much, everyone. Okay, I'm seeing the comments. Somebody said great session with learnings. Thank you for organizing, and thank you to the panelists. We are grateful, to you as well. Thank you to all the participants. And like you said, it was a very good number. Thank you. So I think we'll just leave the floor. I believe we can, leave it to the studio to play some soft music while we allow our participants to exit. every